Hi, it's Charlie giving you Monday's market commentary. I hope you're very well. I'm recording this actually Sunday evening, so we'll have a look at the main stock market indices in a minute. A couple of things to go through. What have we got first? If you're interested, I was interviewed for Loaded Magazine. I know, Loaded Magazine. I did the interview, I don't know, a while ago. A month or so ago, but it's out this coming Thursday, so if anyone's interested in reading that article, it's just an article, you know, as a trader giving advice to people who might be interested in trading and that sort of thing, then that's out this coming Thursday. And I've got a couple of other bits to mention. I got wind last week that a fairly high-profile trader, educator, who I got wind that, or Kim and I both did, that this individual, when trading in front of, when he's training people, uses a demo account, but obviously tells people that he's trading off a live account, and I was just a bit surprised by that last week, and so a little bit disappointed yet again, because I've always said that, even of educators, probably only 10, maybe 20%, but less than 20% of educators are actually the real deal, so to speak. The rest of them are not, and it's a shame when you hear that sort of thing. So this person's fairly high profile, been on the TV plenty of times and all that, and yet actually trades using a demo account when trading, in front of clients. And it's one of those sort of weird arguments, because you could say, well, actually, if you're trading in front of an audience or in front of people and you're teaching them, you haven't got access to all the information necessarily, because you might just be working off your laptop. It's not the same as when you're sitting in your office when you've got a lot of screens and information to your hand. But really, the flip side of that is, well, you're a professional trader. You should, if you're saying you're trading live, then you should be trading live. So, a bit disappointed there this week. So, just a little warning out to you. Just be wary of people that make all sorts of claims, because there's a lot of people out there who aren't quite what they say. And what else have we got here? For those of you that saw Friday's video update, I was in that Aussie dollar trade, and what I thought was interesting is, funny enough, I had an email come through a couple of weeks or so, it was a couple of weeks ago, from an individual who was just saying, why did you were only looking for 10 pips on the euro, but look, it went 90 pips. Why didn't you look at the bigger picture and try and run that? Blah, blah, blah. And it's a good point, actually, but I think that with that sort of thing, and I think a lot of day traders will empathize with this, that sometimes you're only looking for, let's say, a 10-20 pip run. That's what you're looking at, because you're looking at, let's say, a 5-minute chart, and that's appropriate to the risk that you're putting on to the trade in the first place. So it's appropriate to the risk, so the reward is appropriate, so therefore it's at least 1-to-1, probably more likely 2-to-1 or whatever, and it will be a good trade. Sometimes when you're looking for the bigger runs, you've got to treat the trade differently and have wider stops and all that sort of stuff. So I thought it was interesting, because obviously, some weeks I can be looking for small price movements, and other weeks I'm looking for bigger ones. And I think hopefully last Friday was a good example of a week when I am looking for bigger ones as well. Next Friday, or this coming Friday, I may be looking for something small again. It really depends on what I'm looking to try and achieve when just putting together that Friday video. Remember, I'm trying to get them done within the morning, and if I can get some trades banked and done, then that's I've achieved my goal, so to speak, as long as I'm getting that risk reward. So anyway, we try to give you a variety of trades here on the Friday videos, but again, if anyone wants any other requests with regards to them, I've been doing the Friday live videos now for 3 years, I think. If you went onto YouTube, you can see every video that I've ever done. It's all up there, the good, the bad, and the ugly. And happy to do anything else if anyone's wants me to. Right, so let's go and have a look at these stock market indices, shall we? Because they've turned around really quite nicely, actually. Now let's have a look at that weekly chart again, because if you remember, I talked about that weekly key reversal that we had had there on the S&P, and it was on the Dow as well. We did get a bit of a follow through from it, so we have followed through, and so in theory it's sort of satisfied that itself in that it's at least had a follow through. So, and the way the price action has been would suggest that this is going to break out to new highs. So if we look at the S&P, if we then look at the Dow's close as well. Remember, this is the weekly chart, so remember it's come right back. Again, it had a key reversal. It's come a bit lower and now it's turned. But really, this is where it's important to do intermarket analysis, because if you look across the main 4 stock market indices in America, then it sometimes helps you out a little bit. So again, on the Nasdaq we had a key reversal, had a nice follow through from that, and look, we've come all the way back up. But the real one that helped us out was this Russell, the Russell 2000, because this small cap index of 2,000 stocks, we can see that again it had a key reversal week, but look how quickly it's turned that back up and broken new highs. So once I'd seen that the Russell was breaking new highs last week, it told me really all I needed to know, that well, I don't really want to try and short this market right now. Now, I could be completely wrong, and maybe these markets completely roll over from here, but I haven't got too much else going on now. Now, those key reversals were good, but like that pattern's sort of been broken now in the intermarket analysis, so we'll have to see. I suspect we are going to break and go higher at some point over the next week or two. So I can't ever tell you if something's going to go higher immediately. We've just had a nice run for the last week or more, but so we could congest and all of that. But certainly it looks at this case that it's on the cards. Now, for that theory to change, we would have to break back down again. And where would we need to break back down to? Well, really, we'd need to break these lows. That's obviously the obvious one. But I would suggest that if we broke the low of this candle here, this big engulfing candle here, then that would mean that this is probably on the cards for a lower move. But for now, it looks like we're going to break higher. I can't say if it's going to happen today, Monday. Obviously, I'm recording this Sunday evening, or when we could congest for a while, could do a little bit of a pullback. But as it currently stands, with that Russell breaking to new highs, we've got to be watching out for the stock market indices breaking to new highs. I shall leave that thought with you. Be back for Friday's trading. Actually, I'm in London on Friday, so I'm not going to be able to be trading Friday morning, but hopefully I'll trade Thursday morning, and then we'll get that video out to you then. So I'll just do live trading on Thursday instead. Have a great week. Stay safe. See you at the end of the week.